Hello everyone, I'm back again with another instructional video today to talk about credit scores. The national average is 693, so how do you compare? And how do these three credit agencies calculate your score? So there are three credit bureaus that calculate your score: Equifax, Experian, and TransUnion. Although they all have their different criteria, it breaks down to these main five. So for number one is the most important one, which is payment history. It makes up about 35% of your weighted score, and it simply just means if you make your minimum payments on time, and if you are late, how often are you late? Now the second most important criteria is credit utilization. It makes up about 30% of your weighted score. And now it's not necessarily an amount, it's more based on a percentage. So do you use 5% of your credit, or do you use 95% of your credit limit? The more you borrow and the less you pay off, the lower your credit score is going to be. Now the third most important factor weighs at 15%, and that is your average length of credit history. Now that doesn't mean how long you've had your first account, that is just the average of all of your open accounts combined. So if you were to have 3 student loans 5 years ago, the average age would be 5 years. But if you were to open a credit card account today, those 4 accounts, the 3 student loans and the 1 credit card, now averages down to just under 4 years. It is the average of all of the accounts combined. So the longer you have your average credit history, the better your score. Now numbers 4 and 5 each weigh your credit score 10%. Number 4 is credit inquiries, which is how many times have companies had to pull up your credit history, your credit report. And this is stuff like if you were to file an application for a credit card, or request a car loan because you're buying a new car, or they want to check on your credit history if you're trying to pull a mortgage. Every single time a company does that, it affects your credit score. The more times they have to check your credit report, the more your score goes down. And finally, the last criteria is how many open accounts do you have. Now this may be easy to calculate. It's how many student loans do you have, how many car payments are you making, how many mortgages are you paying, and how many credit cards do you have open. All of these affect your credit score. Now the more accounts you have, the better your score improves. All right, those are the 5 criteria that the 3 credit bureaus look into to calculate your credit score. Now how can you improve that score? How do you find your score if you don't know what it is? Stay tuned for episode 2 tomorrow. See you then.